Welcome. In this video, XCN coin bullishness has started again. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. In the previous analysis video, I specifically emphasized the support line that had clearly emerged on the chart as a strong buying zone within the technical structure we carefully examined. This level had served as a key area in the past where buyers stepped in whenever the price faced downward pressure. At that time, while highlighting the importance of this support, I mentioned that in the event of a potential pullback, there were strong technical signals suggesting an upward move could begin once the price touched this area. As it turns out, the anticipated scenario played out exactly as expected. The price reached the pre-drawn support level and began a strong upward move from that point. Such support levels are known to be zones where buyers are actively participating in the market. Especially when a level has been tested multiple times in the past without breaking, it becomes even stronger. Therefore, identifying these horizontal or dynamic support lines in advance provides a significant advantage in accurately predicting future price movements. As mentioned in the video, if this support zone held, a bullish move was likely, and as is now clearly visible on the charts, the price encountered substantial buying pressure at this level and gained upward momentum. Reactions like this also offer insights into overall market psychology. The fact that investors view this price area as a reasonable buying opportunity indicates a concentration of buy orders. Technically, this move validates the accuracy of our prior analysis once again. Furthermore, the fact that the price is not only reacting with a short-term bounce, but also forming a sequence of bullish candles suggests how strongly this level is being respected and how much confidence market participants have in it. These developments can create a window of opportunity not only for short-term trades, but also for medium-term positions. In summary, the strong reaction from the support level identified in our earlier analysis once again demonstrates the importance of being disciplined and patient in technical analysis. For investors who can read charts, signals like these can present significant opportunities, but we can't rely solely on support levels for decision-making. Let's now take a look at other metrics as well. Stay tuned. From a technical analysis perspective based on the Elliott wave theory, the current price movement has entered a particularly noteworthy phase. As signs indicating the completion of the second corrective wave become clearer, an upward move has emerged that could be interpreted as the beginning of the third wave. This move typically represents the most powerful and aggressive part of the trend. According to Elliott theory, the third wave is characterized by significant increases in both volume and momentum, and usually marks the fastest expanding phase of the market. In this context, the sharp upward movement initiated by the price after finding support during the second wave is highly meaningful. The first major target of this rally can be determined using Fibonacci retracement levels. These levels reveal key areas for buy-sell decisions, as well as potential points of temporary price pauses. In particular, the 0.382 Fibonacci level often acts as an initial resistance point in the early stages of the third wave. Therefore, it is quite normal for the price to rise to this level, and as it approaches, temporary profit-taking in the market is likely. If the price reaches the 0.382 level, the reaction at this point will be highly significant. If this level is broken, the rally is likely to accelerate further as investor confidence grows, pushing the price toward the next resistance levels at 0.5 or 0.618. Given that third waves typically extend to the 1.618 to 2.272 Fibonacci extension levels, it would not be inaccurate to say that the current movement is only in its initial stages. Another characteristic feature of the third wave is that it often triggers a psychological shift in the market through a sudden and decisive breakout. At this stage, investors begin entering positions with a don't miss out mindset, which causes a noticeable increase in trading volume. If volume supports the move and technical indicators are providing positive signals, it is reasonable to expect that this wave will progress strongly. In summary, following the completion of the second wave correction, the transition into the third wave appears to have begun, with the 0.382 Fibonacci level standing out as the first major technical hurdle. However, if this barrier is broken, it is highly likely that the price will reach higher Fibonacci levels, initiating the classic targets of the third wave. For investors monitoring the market in both the short and medium term, closely watching these levels is of great importance. Since this phase could be the first strong leg of a potential trend, closely monitoring the charts and supporting the analysis with indicators will be critical. Whether or not this level is broken will be important to track. The price moving above the 200 EMA is a highly significant development for the market, and this represents a strong signal in technical analysis indicating the potential for a long-term uptrend. The 200 EMA is widely regarded as one of the most reliable indicators for identifying market trends. This move marks a pivotal moment that should be closely monitored by investors and traders. Movements above the 200 EMA typically signal the beginning of bull markets, potentially laying the foundation for a sustained upward trend. To delve deeper into the significance of this move, the price crossing above the 200 EMA primarily indicates that the overall market direction may be shifting. Investors may observe that after this key moving average is surpassed, control of the market shifts toward buyers, creating an environment where buyers are more effectively defending against downward pressure. In technical analysis, breaking above the 200 EMA is commonly believed to confirm the start of a bull market. In other words, as long as the price remains above this level, more buyers may be drawn in, which could push the price even higher. As long as the price stays above the 200 EMA, it can be said that the uptrend is gaining strength and may continue for a longer period. When this level is surpassed, it is expected that the price will gradually move toward higher levels. However, investors should not rely solely on this single indicator. Analyzing it in conjunction with other technical indicators allows for more accurate forecasting. If the price continues to stay above the 200 EMA, investors may begin to open longer-term positions. Breaking above this level shows that buyers have taken full control and the market has entered a phase where the bullish trend is stronger. This creates a particularly attractive opportunity for investors using trend-following strategies. A rising market can attract more investors, resulting in a stronger wave of buying. In this scenario, levels that previously acted as strong resistance may now become new support levels. Additionally, movement above the 200 EMA can reflect a significant shift in investor psychology. Buyers may view this level as a secure entry point, encouraging them to take on more positions. This can allow the market to strengthen further and gain upward momentum. At the same time, other investors and traders may interpret the break above this level as a confirmation signal, which could bring in additional buying pressure. While remaining above a key level typically indicates that a trend will continue, such moves should always be monitored carefully. The price moving above the 200 EMA may demonstrate market strength, but can also bring the possibility of a pullback. For instance, the price might experience some profit-taking at this level before resuming its upward movement. Therefore, investors should evaluate the market using signals from multiple technical analysis tools, not just one indicator. That said, breaking above the 200 EMA may signal not only a short-term move, but also the beginning of a medium to long-term uptrend. For long-term investors, this indicates a strengthening trend and the potential for higher levels to be targeted. A rising market often leads to the testing of new highs, which can create new opportunities for investors. Especially the price moving above the 200 EMA may allow investors to confidently open long positions and diversify their portfolios. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.